Sure. All right, we're just about ready to get started. And I think we all know each other, right? Did anyone want to say what they do before we start? No? All right, fair enough. All right, so let's start. I think Cliff and I probably know Lawrence most, so we'll say a couple words and then Lawrence will take it away. So Cliff, I'll start and you will follow. So we have known Lawrence for a long time, and for many of us, he has programmed us to basically say what he wants us to say. So he has this unique infomercial that actually rings in your head, even if you don't want to say it, it just comes out automatically anyway. So we find him as a credible person, and that's why he's here to present to you today. Cliff?
Oh, good introductions. Yeah. Well, I just say Lawrence, some people don't know this, but he's a skilled watercolor artist, and that's one of his hobbies and passions. And you know, it's really lovely, and I think that helps in terms of his accounting. The other thing some people don't know that Lawrence has recently been taking cooking lessons, and you know, and from what I understand, what the rumors are that the reason he's doing this so he learns how to cook the books.
I actually have a blog post about the fact that I do cook sometimes, but that I don't cook the books.
Lawrence, take it away.
Thank you, Dave. Thank you. Let's hit that screen share button. So, good morning, everybody. I'm Lawrence Fox. Thank you, Dave, for the invitation to speak this morning. Thank you to Karen for taking care of it, even though she's not here today. And, okay, how do you drive an accountant crazy? Well, you tie them to a chair and you mess with their Excel spreadsheets and you make them watch. Now, if you follow me on social media or on the Bang Facebook or LinkedIn group, you've probably seen this joke already. It's part of my Friday morning accountant joke series. But you know, after I first time I posted it, I began to wonder. I said, you know, what really does drive me and some of my colleagues crazy? So I did some thinking about my practice and I spoke to some of my colleagues and I came up with a list of things that make me slap my head and go, arg. And I'm sure that all of you, I'm going to come back to that slide. I'm sure that all of you have things in your professional life that would make you look like me in this picture. But the dreaded tax season is upon us. And for CPAs, unlike me, who do taxes, I'm here today with a couple of pointers to help ensure that next year you'll be one of your accountant's favorite people and that they'll look forward to working with you instead of running off into the middle of the night screaming in agony. So let's begin. Don't ever say to me, my books are only for taxes. No, they're not. There is a wealth of information about your business that's buried in your books, and it lets you know what's going on in your business. It helps you make good decisions. Problem is, most of us don't spend any time actually looking at those numbers. And if we do, we wait until the end of the year. You know, if you only look at the numbers once a year, at the end of the year, it's like driving your car in reverse all the time, navigating by looking in the rearview mirror. Yeah, it's doable, but it isn't easy. So I recommend that, you know, you spend some time looking at those numbers, looking at them on a regular basis, not just at the end of the year, and do it on your own or get some help. You know, I realize that for most of you, a certain degree of financial literacy is not in your wheelhouse, and that's okay. So you can get some help from your friendly neighborhood accountant or your friendly neighborhood bookkeeper. But I have to tell you that if you want this kind of advice and this kind of help, please book time with them after to tax season. Don't call them now and try and book an appointment to start going through your books and reviewing what's going on, because they're about to get dreadfully busy. Best time to give them a call is probably in May, maybe towards the end of April, to book something for May. Kind of things that I see when I go over somebody's books, it's revenue versus profitability. It's a big difference. I mean, revenue to a certain extent is a vanity number. It's very nice to be able to say, oh, you know, I sold $50,000 worth of business this week, or I had a six-figure year. And it's nice to brag about it, but it doesn't mean anything. What really is important is how much of it you get to keep. And that's the profitability, because profitability is the reason, I think, that most of us go to work for ourselves. You know, it's we do it in order to have something left over. It's no good if it all comes in and it flows back out again. And profitability determines all sorts of other things within your business. It'll determine your pricing strategy. It'll determine your marketing. It'll determine who you market to and how you do it. And so it's much more important to take a look at both the revenue and the profits. And at the same time, one of the things behind that profitability is figuring out what your key expenses are. For most of us who sell our brain for a living, we probably don't have a lot of big expenses. But for those of us that actually sell products, in addition to coaching or consulting, you know, books, manuals, Dave who sells his, you know, the courses with the DVDs, knowing the costs of that stuff can be really important. And especially with the threatened tariff war with the states, if you're importing stuff and selling it, that's going to have a major impact on your profitability. The other thing in keeping an eye on this stuff is to avoid what I call surprises. One thing I do when I review things with my clients on a quarterly basis is we take a look at things like your software subscriptions. I've actually reviewed them with a client one time, and she said, oh, wait a moment, I'm not using those two services. Well, you're paying a monthly fee for them. Oh, no, I thought I canceled them. No, you didn't. That's money going out the door. I read an article last year. There was a guy who went through his personal credit card and looked at it, and between all of the entertainment streaming services, apps for his telephone, apps on his computer, he was spending anywhere between $1,000 to $1,500 a month on subscriptions for stuff. I don't know if you remember, but Bank of Montreal used to have a commercial about that. Did anybody remember that one? This commercial they had with the couple that was put the TV on. They were going to watch something and see the hot new show. They were only going to subscribe for 3 months and then turn it off. And, you know, one of them says, but you never do that. And their cat is watching cat flicks. This is based on reality, ladies and gentlemen. The second thing that can drive me crazy is people who don't put aside a reserve for their taxes. If it ain't there, you can't pay it. I used to run a networking group for independent consultants, and somebody spoke to me one time and said, I can't renew because I'm going back in-house and taking a full-time job. And I said, why? He says, because I'm getting tired of getting to the end of the year and borrowing against my line of credit in order to pay my income taxes or to pay the HST. Ladies and gentlemen, it's bad news here, but I have to tell you that no matter what, CRA must be paid. If you have collected any money on behalf of the government, like HST or employee source deductions or any other sort of taxes, CRA views these as trust funds. That's their money that you're holding on to. You can't spend it. Okay? And they are considered to be a secured creditor after the bank, but before anybody else. Several years ago, CRA used to claim they were in a first position, even ahead of the banks. It went to court, CRA lost. But the court did say So if you've got a secured loan with the bank, yeah, they come number one, CRA comes number two, and everybody else comes after them. And there is no bankruptcy protection. If you go bankrupt and owe money to the CRA, they can still go after you. And there's no corporate shield. So if you are incorporated and you owe money to CRA for HST that you've collected, they can go after you personally because you are a director or officer of the company. So you need to make sure that that money's there. So what do I advise? Make a separate tax savings account. This is not a TFSA. That's a completely different animal, as I'm sure Joe will be able to tell you. But this is a separate account. Even if you don't go full profit first with multiple bank accounts, have a separate bank account and put aside the money for the HST and your taxes. Being an anal retentive accountant, I have a spreadsheet. I enter every invoice that I send to a client, and it calculates what the HST is and some money for my personal taxes and some money for my property taxes. And when I get paid by a client, that money goes in my bank account and the other one goes separately into that savings account. But pay those taxes quarterly. Why? Well, first of all, with HST, if you collected over $3,000 in HST last year, you are required to send them installments this year. If you don't send them enough of an installment, there's penalty and interest. But the other reason I recommend that you do that is if the money is sitting in that little special account, it keeps growing and growing and growing. And then you look at it and you go, oh, things are a little slow this month. Maybe I'll borrow from this account to pay my bills and I'll pay it back later. Let me tell you from personal experience, this never happens. When we had the pandemic and things were a little bit tight, I borrowed from the tax account in order to make ends meet. I'm still paying Revenue Canada for some of the HST from 2023 that I haven't paid. So don't borrow from this account. Make those payments. The third thing that would drive me crazy is people who don't reconcile their bank accounts or balance your checkbook. This is the very first step that anybody takes to make sure that their books are in order. Why? Because your bank statement is an external document that somebody else gives you. If your bank tells you that there's only $1,000 in your bank account, 98% of the time they're right. And if your books don't show that, you need to figure out why. If everything does balance, then at least you know that you've picked up all of the ins and all of the outs. They may not be in the right bucket, which is why we go back to, of course, my first thing about making sure that everything is done right. They may not be in the right bucket, and that's what your accountant can help you with. But at least you know that all the funds are taken care of. And listen, and I suggest that you do this every month, or at least every other month. I don't remember what I had for lunch last week. How am I going to look at a bank statement that's 6 months old and I see a transaction for $72.52? Do you think I'm going to know what that is? No, I'm not. And it lets you watch for weird stuffs. How many have used your bank's app to take a photo of a check to deposit it? Hands up. Anybody?
No, never done
Really? Okay. I just did it last week to deposit my bribe check from Doug Ford because I wasn't going to run up to the bank. But there was a restaurant in British Columbia a couple of years ago. They were paying all their staff by check. Some of the employees were using the take the photo thing to deposit their check in their bank account. Then they waited 3 or 4 days, took that check to a different bank where they had a bank account and deposited the money in the ATM.
Wow.
And then they waited a couple of days for the check to clear and they took the cash out of the bank. Yes, they were defrauding and stealing from their employer, but they were doing this. The employer didn't do their bookkeeping for 6 or 8 months, didn't realize that their employees were stealing from them. When they went back to the bank to complain about it, the bank said, I'm sorry, you only have 30 or 60 days, whatever the rule was at that bank, to challenge a bank statement. There's nothing we can do to help you. If you want to get that money back from your employees or your former employees, you're going to have to sue them. You're going to have to get the police involved. It's not our problem. So that's why I say to people, you need to keep an eye on this kind of stuff and do it on a regular basis. So as I said, my advice, be like Nike, just do it. And if you're not doing your own bookkeeping, somebody else is doing it for you, that should be one of the things that you make sure that's on their list and that they're on top of it as well. The fourth thing which drives me nuts, and many of my colleagues especially, is people who mix business and personal. Now, while I normally do not take organized crime as a great example of how to run a business, in The Godfather, Michael Corleone famously said, "It's not personal, it's strictly business." And that's how you should treat your business. Why? Well, we call it a best practice idea, not to mix your business and your personal. Several years ago, I had a discovery call with a potential client. And during that call, he said to me, "I have one bank account only, and all of my business income and all of my business expenses go into that. Oh, I pay all of my personal expenses out of that account as well. Oh, my Canada pension plan and my old age security go into that account. So does my wife's." And that's when I said to him, "I'm sorry, but that's a ball of twine I'm not going to untangle. I'm not interested in working with you." That's crazy. It's a best practice idea not to mix this stuff up together. Also, it gets you used to the idea that there are two entities, you and the business. Now, it's easy to get them confused if you're self-employed and you're not incorporated. But if you are incorporated, if your business grows to the point where you want to be incorporated, at that point, you are now two separate entities as far as the government is concerned, the corporation and you. And if you've always thought of things that way, it's much easier to do that or continue to do things that way. And it certainly makes life easier for your accountant. And the other thing is, should there, God forbid, be an audit, and CRA starts to discover that you're mixing business and personal, they'll start to dig deeper and figure out what's going on. And it could end up costing you, in the long run, it ends up costing you a lot of money, especially if they realize that you are putting personal expenses through the business and trying to use those as deductions. And here's the last one. People who say, "Oh no, Lawrence, this is a legitimate business expense." Now, as I mentioned, I did some thinking about my business. I did some research. I spoke to some of my colleagues, and this was, bar none, the leading thing that drove them nuts. And in fact, here are some examples of things that some of their clients wanted to claim as deductions. "My clothes are deductible because I need to look good." Ladies and gentlemen, even if you're on TV, even if you're a professional speaker, even like me, you wear bow ties as part of your image, as part of your marketing, they're not deductible. Okay? I can't deduct my bow ties, much as I'd love to. But the only thing that is if you have to buy a uniform or safety equipment or something like that in order to do your job, yeah, you can deduct that. But otherwise, I'm sorry, it's not deductible. My poodle is a watchdog. Look, I'm not picking on poodles. I'm sure poodles are a beautiful animal, but Fifi sitting on the couch watching you work does not turn her into a watchdog, which means you cannot deduct the vet visits or the dog food or any of that kind of stuff. Yes, if you had a warehouse or a junkyard or a construction site and you had professional watchdogs trained, yeah, some of that may be a deductible expense. But Fifi the dog, my cat is that's not a deductible expense. And I want to claim my doggy daycare because If I don't take the dog to daycare, I can't go to work. So therefore, I should be able to take the dog to doggy daycare and deduct that. And I'm sorry, but I don't know of a tax authority on the planet, despite some people saying that dog is as much a part of my family as my children. Your children, and if I get a deduction for my kids, why can't I have a deduction for the dog? I don't know of any tax authority on the planet that lets you do that. And the last one that I have seen is, if I buy gifts for my mistress from my personal account, my wife will find out. Now, I have to say, anytime I've done this presentation, and I've done it a couple of times, that line, I know there's a lot of people smiling and they're laughing about it and they think it's really funny, and it's something that I made up. Every time I've done this presentation, and an accountant or a lawyer will step forward and say, I have seen this happen in divorce cases. And not only does it mean that the husband ends up paying his spouse more money for the value of the company, but at least in one case, CRA reopened his income tax returns because they said, oh, that means that you were taking money out of the company for your personal use. That's extra income that you weren't declaring. So I have to tell you that the sister of a cousin of a friend of your brother's bartender, or some guy on the web, or that you meet at a networking meeting who's got a scheme to help you reduce your taxes, these are not good sources of advice. Generally, the rule is if you spend it to make money or to support your business, it's okay. It's a fine. It's a legal deduction. If you're not sure, ask a professional who you know, like, and trust for their opinion. And I got to be honest, if you push it, if you were one of my clients and tried one of those things that I suggested and insisted that that be a deductible expense on your books, don't be surprised if your accountant walks away and says, thanks, but no thanks. I'll be honest. I worked too darn hard and too darn long to get my designation to throw it away over something like that, over aiding and abetting somebody to cheat on their taxes. A few words about me, although the introduction was really nice. I am the bow tie wearing, fountain pen wielding, online CPA, and I work with coaches, consultants, and creatives who'd rather have root canal than do their books. I don't do taxes, even though we talked about it a lot today. And I'm not dull, gray, or boring. And if you want a dull, gray, or boring accountant, please don't call me. I also love to talk about stuff. So if you have a podcast or any other group that would love to hear from me, I'd love to hear from you. Thank you for listening today. Thank you again, Dave, for inviting me to speak. Thank you for paying attention and listening. That's the end. And I'm here if anybody has any questions, comments, or complaints.
Oh, Lawrence, I do exactly what you said with both the HST. I say to clients, I said, if I get a check for $113, $13 is HST. So that immediately goes into a separate bank account. And then I'm left with $100. So then I take 10% and I put it in another bank account. That's for tax. And then whatever's left out is what I can spend.
I mean, you know, when you work for somebody else for a living and you got a paycheck, they took the taxes and the CPP and all that kind of stuff off the top, and you had to live off what's left. Well, the same thing is true when you work for yourself.
Mm-hmm.
Like Maureen is using 3 bank accounts. You know, she has her operating account, she has a tax account, she has an HST account. I don't go that far. I have one, so I have a formula that does the 13 plus another, and it does that. And it makes life so much easier and a lot less stressful.
Mm-hmm.
Lawrence, if you're of a certain age and you're getting the pensions, what I personally do is have the government retain 80%. So we get 20% paid into our account each month. So they retain 80%. So in the year, we've got all sorts of other taxes to pay and stuff coming up. So at the end of the year, I don't have to think about it. It's there.
Yeah.
But I'll tell you one thing I wish you could enlighten the whole population on, which drives me absolutely batty because I've tried to explain it in simple terms, but it doesn't work for some people. We have clients, and when I'm managing my wife's practice, she's a psychotherapist. So if they got insurance, they need a receipt to prove they paid for that, and then they get reimbursed.
Yeah.
People do not understand the difference between an invoice and a receipt. They have no clue. I've tried all sorts of ways to explain it. I've even Googled it for how to explain the difference from that to a 5-year-old. It still doesn't work. It's very, very, very difficult for them to understand the difference between a receipt and an invoice. And I know you can put it and you can explain it perfectly. But how you get through and these clients aren't just idiots. I mean, they've got good jobs. They're well paid. They work for banks. They work for all sorts of. But the receipt.
I can't answer that.
No, you don't have to.
I would.
Because they'll give an invoice and then they'll pay it. And then I will say to them, if you have to have an invoice, pay at the time, pay it ahead of time. But if you get an invoice and then you've paid it, for your insurance company, you need to show the invoice and show the payment. But even if they pay the invoice and they've paid the invoice, they still say, I need a receipt. But I say, you've got an invoice, the invoice shows it's been paid. No, they have to give them a receipt. So even though they got an invoice, it's paid.
The invoice is just to say, I need my payment of this amount.
A receipt is when you go into a store and you buy
what you actually pay.
Yeah, you go into a store.
All right. So if you're talking about insurance, people with medical insurance, part of the problem is the insurance companies ask for a receipt, not the invoice.
Right.
Because they want proof that you actually paid it, not that you incurred the service.
Mm-hmm.
But if you've got a receipted invoice,
doesn't matter. Remember, it's the insurance. The problem here is not your wife's client. Your problem here is the insurance company.
Now, the insurance company take the invoice with a receipt paid. They take them.
No, the insurance. Cliff, it may depend on the insurance company. The insurance company may look at an invoice and say, yes, it means that you incurred the service, but I have no proof that you actually paid for the service, and we reimburse you after you paid for it.
Well, the invoice has a zero balance, but we've never had a problem with the invoices going through. The problem has been the client submitting it. And when I've said, I'm not giving you a receipt as well, put the invoice in because it shows a zero balance, they always get paid. It's never been an issue with the insurance company. It's an issue with the client not understanding the difference between the two.
I can't help you with that. That becomes an educational thing.
Frustrating.
What you need to do is hand it to them and say, this is your invoice and receipts because it shows zero at the bottom. That's all you need to say.
So you could make the one into
or Cliff, stop. Cliff, take the word invoice off the piece of paper. If it has a balance of zero, have it say receipt, and they'll be happy.
I do that because I'm not going to alter that. Go into QuickBooks and alter. You know how difficult that is to change around and play around with that.
Takes.
You have to educate them one at a time. But
what's your thoughts on it, Joe?
No, I agree. Receipts, receipt has to show that the balance has been paid, right? And so that's what I always tell my clients. And then I always give them the waiver. I'm not an accountant, right? So I try to wash my hands of it.
Terminology sometimes is the thing that trips us all up.
Exactly.
All right. Any other questions? Jeff, I see you're thinking, man. What's in that brains?
Let me turn this up a little bit. Hold on a second.
We can hear you.
No, I just want to make sure I can hear you.
Okay, shoot your question at Lawrence.
Oh, by the way, I forgot right at the end of my presentation, I was about to say, and I always say, Dave, I'm
the guy to call when you absolutely, positively hate doing the books.
Very good.
But how many years have we heard that? But those taglines are so important. You don't forget the people.
You know, it's funny because I bounced that off somebody I know who is a professional speaker and teaches people how to speak. And she says, that's not a great catchphrase.
Oh,
Wow.
You know
I
what?
think it is. That's
The,
one of
the
the
whole
top.
idea is you want somebody to remember you when
Oh,
you're
I know,
gone.
Dave. I love her, honor her, and respect her, but I don't always agree with her.
Yeah, and if it does that, then it's great. All right, we're still open for questions. So Jeff, if you don't have one, um, no? Okay. So Lawrence, you did mention something like 30 to 60 days. Um, the bank will say that's your problem.
Yeah, take a look at your bank statement. On the bank statement, there's usually a disclaimer that says up to what point the bank statement can be challenged or if there have any questions.
I've been looking at my credit card statement and I'm seeing some charges in there that I don't know about. I don't know what dates they were, but I know they're wrong. So I'm thinking, am I going to get into that problem or the company
Quite
will just credit
possibly.
me?
That's why you need to review them, like review that statement right away. And if there's something there that you don't recognize, you need to get in touch with the bank immediately.
And the bank will tell you to call the company first to see what's happening.
Okay, they will investigate it. That's
Yeah,
for sure.
no question, no
Okay,
question.
that's not they have to investigate it, but if it's gone beyond a certain time, a lot of them have a rule that says sorry, too late. You
I think
can't
it's 2
wait
or 3 months.
I mean, I listen, I had a client because I go over the books all monthly. There was a charge on a debit card on his account for cosmetics. His wife doesn't have the credit card. I know he says, I don't even think we have a debit card for the company. Okay. Well, according to the bank, one was issued, but he says nobody in the family. I don't have it. My wife doesn't have it. I don't know who it is. We didn't make the purchase, so the bank reversed it. But we caught it right away.
Yeah, very important.
And reported it. I have another case with another client where we were sent a wire transfer, and the people sending us the wire transfer said, "We're sending you X," and what arrived is about $1,000 less. And the sender keeps insisting he sent us the right amount of money. We reported it to the bank right away. They still haven't resolved it, by the way. We still don't know what happened, but if we didn't report it right away, that's why it's really important that you regularly check your bank accounts online. You always take a look at that bank statement. I say to most of my clients, even though that I do the bank reconciliations for them, I really still like them to look at the bank statement before they send it to me, or their credit card statement before they send it to me, just in case there's something there that stands out to them that doesn't make sense. Because, I mean, I might look at a purchase and get in touch with them and say something's weird here, but I may not, because it's not my business. That's what I said. I said, Dave, do you remember what you had for lunch last Wednesday?
Think so, yes.
Okay. How about 2 Wednesdays before that?
The same thing.
Oh, okay. Well,
Well,
you live an exciting life, Dave. I can't help that.
what I do is when I go to a teller, I said, I want on a small piece of paper, I want Visa pending. And some teller said you can't do it. I said, yes, you can. I do it all the time. And that's where I caught the fraud on the pending transactions.
Maureen, who goes to see a teller anymore? Everybody does. Don't you bank online?
No, because people give me checks. So I rather go to the bank.
Oh,
And I
okay.
don't do an ATM because I made that mistake once and overdrew the account because I did it on a Friday and the thing doesn't get posted till Monday. And I didn't know that. And so I refuse. So I go to a teller and that's what I do. I say, and it just
I'm just saying because
happened.
when you go online, it does tell you what
It tells you, yeah.
what transactions are
pending.
pending.
Yeah. And so anyway, and I happened to go to another TD bank that wasn't my branch. And I said, Visa pending. I looked at says, oh, I says, there's 4 transactions here are pending that are not me. One was Italia Rail, and I'm here. I'm not going to Italy. And the other one was Bristol and Suter. And I looked it up, I Googled it, and it was some enforcers in the UK. So, and it just happened that the account manager or whatever their title is happened to be sitting at the back, and she knew me because she happened to be the manager at my branch, and so she let me call Visa, and Visa blocked the whole thing.
Yeah. Yeah. That's the thing I was going to say about the cards. Excuse me. If you're buying from regular people, you know what it shows on your card. But it's the odd time I've had my wife's bought something and I've gone to her and said, what's this? And we've had to figure it out because the name that she's bought it from doesn't show up the same name on the card. And it takes a little bit of investigation.
Yeah.
Sometimes you have to go into Google and put it in and find out what it is. And most times it's legitimate. And we have a couple of times when it's not. And we've got scammed.
Especially when you're buying software online, because sometimes what happens is on the credit card or their debit card statement, it's the name of the card processor that shows up on the credit card, not the person that you bought the software or whatever it was from. So you're looking at that and going, who the heck is, AZA processor? And you're going, I don't know what that is. Well, it's the credit card processor. Okay. Or it's the same thing. Very often I'll see a transaction, it'll say PayPal, because somebody, made a purchase through PayPal, but it doesn't say which PayPal vendor got the money. It just says PayPal.
Mm-hmm.
So that's also why I tell people that this is the kind of stuff that you need to review on a regular basis, not just because you want to make sure that you're not being defrauded, although that's an important thing, but because memories are not, they're not that accurate, especially over time. As an aside, for almost all of my clients, I have them using software where they take a picture of the receipt.
Mm-hmm.
And then it gets uploaded to some software where we both can look at it and review it. And I press a magic button and it transfers it into QuickBooks. And so, when I go oot and a boot and I go shopping, I stick all the receipts in my wallet. And then when I come home, I take the receipts out, I take the photo and I put the receipt away. I'm done. I have my clients, I train them to do the same thing. And then we have the physical receipt and I can look at the receipt. And even if I'm still not too sure what it's about, I can ask them, but at least I can say, here's a credit card receipt from XYZ. I can see it's on the receipt. It's for a certain amount of money. What was that for?
Yep. Many, many years ago, a close friend of ours was an accountant for the last 40 years, he just retired, which is driving him batty because he had a business, big, busy firm, did taxes like you were saying, and this is the first year he's not going to do it. So he's traveling a lot because otherwise he's going to go insane. But about 35 years ago, he gave what I thought was good advice. He said, if you're in business, declare your income. Or if you're going to take a bit of cash, take no more than 10%. But basically declare your income. And if you're going to be creative on your expenses, because the government gets very excited if you don't declare your income. And if you've got a few expenses that are a bit gray and they decide to disallow them, then you're not in so much trouble.
You mean don't bring your income down to zero? Is that basically what you're saying?
You can bring it but it depends how you are. If you're in a corporation, they look at it and your income's very low that year, you may only have a couple of grand, but they can see it's mostly taken out through salaries. I don't think you're going to draw any problem because salaries really are just, the owner's taking a withdrawal. But if you've got every other expense up there, let's say you've got 100 grand of sales and you draw out 10 grand each for the two people and the rest are all just expenses for other stuff, you're going to obviously draw some attention to yourself.
I know of many companies that never showed a profit for taxes for many, many years, but managed to support multiple families for that 20 or 30 years. So as long as you're consistent.
Yeah,
I
that's
mean,
probably-
CRA will tell you that they're not in the business of judging your business model. As long as, and the fact is, yeah, okay, so let's say I have a corporation and the corporation shows very little income. Well, that money has to go somewhere. That means that Lawrence is getting paid. So now his income is going to be higher. Sooner or later, it balances out if you're being, if you're running the business properly. I'm not talking about people that are not reporting their income properly and trying to, it's perfectly legal to try and reduce your taxes. What's illegal, what's against the law is evading taxes.
That's one thing about a corporation, Lawrence, because I mean, if I look at the tax we pay, and it's nothing. It's 15%. I don't even think about the tax really,
Well,
because it's low enough that you don't even, I mean, I don't try and fiddle the tax because there's no
well, I'm saying, okay, so
point.
in many cases, okay, so it depends on what you do for a living. I, for example, was not allowed to incorporate for many years. Okay, professionals, accountants, lawyers, doctors, engineers, all these people were not allowed to incorporate. A number of years ago, they did make it legal, but there are certain restrictions still. But in a lot of cases, speak to an accountant. Well, okay, if you speak to an accountant, they'll tell you that in Ontario, the rule of thumb, more or less, is if you have $40,000 or $50,000 in taxable income, it pays for you to incorporate. If it's below that, it may not, although there may be other reasons to incorporate, but from a pure, straight tax perspective. A lawyer, on the other hand, will tell you to incorporate right away if it's legal, because the accountant is trained to protect you from CRA, and the lawyer is trained to protect you from other lawyers. Right? Because remember, your lawyer's job is to strip the other guy naked and throw him outside in a snowstorm during February. Right? His lawyer's job is to stop your lawyer from doing that. So that's why the lawyer would tell you to incorporate right away, all things being equal. I mean, that's a whole other presentation and a whole other topic of conversation. But Cliff is right. I mean, and back in accounting school, they used to teach us a formula of the best way to leave the money in the business and pay yourself a salary and a dividend and bonus. And I don't know if that formula still exists. But a good accountant, a good tax accountant will look at you and the corporation and figure out how to get the total taxes between the two of you reduced. So it may mean the corporation pays next to nothing and you may pay more than when you were self-employed, but the total between the two of you will be less. That's the theory. I don't know about the practice because I don't do that stuff.
So let's do this before I turn off the recording. Lawrence,
Yes.
let me know exactly who you'd like to serve or what you're looking for as the company.
I work with, as I said, coaches, consultants, and creatives. I tend to work with solo operators or people with established coaches or consultants, solo operators who are big enough and busy enough to know that they can't do it all or are not interested in doing the bookkeeping and the accounting. And they're beginning to build a small team. If you already have 2 or 3 employees, depending on the nature of the business, then you're probably a little too big for me because you probably need somebody on staff 1 or 2 days a week. And I'm not looking for a part-time job.
All right, good.